looking at a rally like we saw today, we wondered, what is the one word that comes to mind when you're thinking about this rally today? Dan Nathan, what's your one word?
Premature.
Premature. Jeff Mills.
Yeah, it's got to be pivot. I think every time you see a rally, at least for the past 12 or so months, it's been the pivot narrative that's been driving it.
Courtney, your word?
Consensus is my one word.
Steve?
Expectations.
All right, so you guys on this side of the desk, to my right, seem to have some overlap here in terms of expectations and consensus. So, Courtney, what do you mean by that?
Yeah, so when I say consensus, what happens when you have this overall consensus, what happens is the markets tend to confound that and go the opposite way. Because all of the end of last year, you saw pretty much every talking head said markets were going to have a horrible half to the first half of the year, and then they were going to recover second half of the year. And now what's happening is the exact opposite, because once you expect all that, you're already seeing companies are cutting their earnings. They're already anticipating the recession that hasn't happened yet, and it's really going to dull that impact. And that's really why you're seeing the markets already starting to recover. And I think a lot of that, you're going to see this get priced in, despite what everybody was saying last year, and that sentiment's turned on a dime.
Yeah.
Expectations on the Fed, expectations on companies, on earnings, on guidance. What are we going to see? So the street, as long as the guidance beats what the street is expecting, the market goes higher.
Right. And it sort of dovetails with what you were saying in terms of premature.
Yeah.
The idea that everybody's expecting the same thing. So you want to be out ahead of that expectation.
And listen, I think we've been talking about this. I think your point is a great one. We were talking about this in December, something that was a bit of an outlier, let's call it, in the late summer, early fall, became consensus. And there's no way that if everyone says the first half's going to be bad and the second half's going to be good, that's the way it's going to play. And so I agree with everything that you guys said. I agree with the pivot aspect of it. I would just say it's a bit premature, because what's really different year over year to me is how much tighter financial conditions are, how much tighter or the liquidity backdrop of things are right now. And so if you think about where the S&P 500 is relative to, let's say, 6 months ago, it's kind of unchanged. So that has basically anticipated the change in consensus. The closer we are to a pivot, and I guess the point I would say is, like, the market's one thing, what's going to happen in the economy is another thing. And so the higher that we run before we have what the Fed is going to do and say, and before we get Q4 earnings in 2023 guidance, I think that's a risk.
I know you want to get to Mr. Mills, but the problem is, what happens if the market has already discounted too much for the expectations on earnings? That's where you get caught up in the rally that is sort of blindsiding everyone that could actually last.
Yeah, I mean, again, so did we just push it one quarter? Are we going to have like a retest of the October lows? And again, that was somewhat of a consensus as we came off the October lows that we're going to come back. But it's not only about consensus. It's not only about positioning. It is a lot about just kind of like what we're talking about, liquidity. And if buy the dip was the thing when liquidity was really easy, and it's the exact opposite way right now, I don't just think that's going to change on a dime anytime soon.
I get the point on financial conditions being a lot different, Jeff Mills. At the same time, companies have been battening down the hatches for months. We've seen cuts in OPEX. We've seen headcount reduction at this point. I mean, real belt tightening happening. So, isn't corporate America a little bit better prepared? I mean, there's a benefit to consensus, and that is the ability to prepare.
Yeah, but I think they're preparing because of the demand issues that are in front of them. And I think that, everybody was caught sort of flat-footed, a lot of these companies only focusing on growth. And now all of a sudden they're forced to pivot away from that and more toward kind of being focused on margins and profitability and making sure the businesses are ready for a slowdown that's coming. And that's why when I look at market leadership, I don't see it being fundamentally driven right now. We talked about this on Friday a little bit, but sort of high beta versus low beta, this mean reversion trade, these high flyers that are up so much this year, that gives me a little bit of a pause. It reminds me of the summer of 2022 where, inflation comes in light, everybody thinks the Fed is going to pause or cut, and then we see that big run. So that's part of the problem for me. And then I do go to earnings and I look at expectations, and they do continue to weaken. If you go back to the beginning of the year, consensus was for about 1.5% growth decline in earnings. Now expectations are for 3% decline in earnings. And if you look out to the full year, expectations for growth are now down to 3.5%. So, I know people are sort of anticipating this slowdown, but earnings expectations do continue to come down. That's why the multiple has gone from 16.5 to 17.5, and I just don't know if I want to hang my hat on multiple expansion right now for a sustained rally higher.